Welcome to Block Recap, simplifying crypto one story at a time. Today, we are talking about something that might not be a token or a coin or even built on a public blockchain, but it's real, it's live, and over 6 million people in India are already using it without most of us even noticing. I am talking about the e-rupee, India's official central bank digital currency or CBDC. Now, let's be honest. CBDC might sound like something buried deep in a boring RBI white paper. But trust me, this could quietly change the way money works in India. Not just for you and me, but also for businesses, banks, and even crypto platforms. So let's break it down. Back in late 2022, RBI Governor Shaktikanta Das said, quote, CBDC is going to be a major transformation in the way business is done. End quote. And since then, RBI has been slowly and very strategically testing the e-rupee across different use cases. There is a retail pilot for everyday consumers and a wholesale pilot for big banks and institutions. And as of now, over 1,000 crores worth of e-rupee is already in circulation. That's right. Quietly, slowly, without the usual crypto hype, the e-rupee is becoming a thing. But before we go any further, let's clear one big question. What exactly is a CBDC and how is it different from crypto? So, here's the simplest way to think about it. CBDC or central bank digital currency is digital cash issued directly by a country's central bank. In India's case, that's the Reserve Bank of India. If you hold 500 rupees note in your wallet, you are holding legal tender. The e-rupee is just the digital version of that. Same value, same backing, but stored in a digital wallet instead of your pocket. Now this is very different from Bitcoin or Solana. Bitcoin is decentralized. Nobody controls it. Its supply is fixed and its price is volatile. CBDC, on the other hand, is centralized, state-backed, stable, and just an extension of Indian rupee. CBDCs do not require distributed ledger technology or blockchain. These technologies are options, but central banks choose based on policy goals, infrastructure needs, and national contexts. For example, some central banks use private or permissioned blockchains like Hyperledger Fabric and R3 Corda. Projects like Jasper by Canada and Ubin by Singapore use DLT platforms in pilot phases. Whereas China's digital yuan eCNY does not use blockchain but a centralized system, a tiered system. The Bahamas Sand Dollar uses a more centralized infrastructure with some distributed elements. Again, it boils down to design chosen based on objectives. A side note, it is also different from stable coins like USDT or USDC, which are issued by private companies and backed by dollar reserves. So if crypto is like the Wild West, open, chaotic, and full of opportunities, CBDC is more like a secure government zone with rules and guards and ID cards. It's money but programmable. And that programmability, that is where things start to get really interesting. The RBI is not just rolling out e-rupee as a digital alternative to cash. They are testing how this digital rupee can do things physical money or even UPI cannot. For instance, you can now transfer e-rupee to someone directly, person to person, without needing a bank account. You can walk into a shop, scan their UPI QR code and choose to pay in e-rupee instead of using UPI or a card. The e-rupee can even work offline using NFC tech, so you can make payments in areas without mobile data or internet. But here is the real game changer: programmable money. Let's say the government wants to give fuel subsidies to public servants. With e-rupee, they can send that money to your wallet. lock it so it can only be spent at petrol pumps, and even set an expiry date if it's not used within 30 days. This is not theory, it is already being tested. In Odisha, 88,000 women received benefits directly into their e-rupee wallets under a welfare scheme. Banks are testing e-rupee for tenant farmer loans, where funds are dispersed digitally and can only be used for agricultural inputs. There are even pilots for green incentive programs, where carbon credit linked money can only be spent after you meet certain sustainability goals. And now, even non-bank apps like PhonePe and Google Pay are being allowed to integrate e-rupee wallets. This means you might be able to use e-rupee soon without ever touching a bank app. So, what does this mean for the Indian crypto ecosystem? Honestly, it is not a direct threat. CBDCs and crypto exist in different lanes. Crypto is about decentralization, permissionless innovation, borderless transactions. CBDC is about sovereign money, digital cash you can use with confidence, backed by the full faith of the Reserve Bank. But here's where things get more interesting. CBDC could actually help crypto projects, or at least force them to level up. If the RBI enables real-time settlement using e-rupee, crypto exchanges in India could finally ditch clunky bank deposit systems and move to 24/7 instant money transfers. If more Indians get used to wallet-based payments through e-rupee, they'll be more comfortable using self-custody wallets for other digital assets. It also has the potential to streamline crypto tax by linking every cash out to a KYC'd wallet. But P2P and self-custody will still operate off-ledger. They'll just get a clearer audit trail when users cash out to e-rupee. And if RBI begins to explore cross-border e-rupee transfers, which it is, we might see a future where remittances, forex settlements, and trade flows happen through digital currency corridors. And once that infrastructure is built, who's to say it won't be used by crypto players too? Now let's not get carried away. The e-rupee pilot is still in its early stages. Adoption is slow, the apps are clunky, and honestly, most users don't even realize they are using a CBDC. But that is exactly the point. India is building a programmable sovereign money system at population scale, with none of the usual noise. And for a country like India, where subsidy leakage, banking access, and payment speed are real challenges, this kind of programmable digital cash could quietly reshape how money is issued, moved, and used. However, here are some questions to ponder over until our next episode. When subsidies become programmable, who decides the rules? When an e-rupee can hop to Singapore in seconds, do NRIs still pay 5% remittance fees? And with de-dollarization movement, what does that mean for India's place in any future BRICS payment grid? Could e-rupee wallets give migrant workers true banking access across India? And for millions of cross-border laborers working in India, will CBDCs ever recognize their payments? And last but not the least, the question of privacy, threats of data leakages, data abuses. These are questions about money, power, and access, and they will shape how India's financial future unfolds, whether you are in crypto, fintech, or just curious. That's it for today's blog recap. If this episode helped you understand the e-rupee better, please follow. And if you think your friends in crypto or fintech should hear this, do share it with them. See you next time.